If you had to choose one form of money to protect your wealth for the next 100 years, would you go with something that has existed for millennia, like gold, or something created just over a decade ago, the Bitcoin? It seems like a simple question, but it carries the weight of all human economic history and our future. We're living in an era of structural inflation. Governments print trillions out of thin air, central banks manipulate interest rates like puppets, and the money in your pocket loses value year after year. Trust in the financial system is eroding, and the question many avoid facing is, what really makes money sound? The search for a true store of value, something that preserves wealth over time, is back at the center of the debate. And in this search, two contenders emerge as serious options: gold and Bitcoin. Today, we're putting them head to head, not just from a technical perspective, but through three fundamental lenses: philosophical, historical, and ethical. Because to understand what real money looks like in the 21st century, it's not enough to stare at price charts. We need to examine the essence of what makes something truly reliable as money yesterday, today, and tomorrow. So the question I invite you to reflect on by the end of this video is simple. Are you protected with gold? Or have you still not understood what Bitcoin really represents? What makes something worthy of being called money? It's an old question. Even in ancient Greece, Aristotle tried to answer it. According to him, good money needs to have 5 essential qualities: durability, so it doesn't deteriorate over time; portability, so it's easy to transport; divisibility, to allow transactions of various sizes; recognizability, so it's widely accepted; and scarcity, so it can't be created arbitrarily. Centuries later, modern economic theory refined this view and added 3 core functions: to serve as a medium of exchange, to facilitate trade, as a unit of account, to measure value, and perhaps most important of all, as a store of value, the ability to preserve purchasing power over time. When an asset fulfills all these functions, it can be called sound money. Money is what withstands the corrosion of time and the manipulation of power. Or, as Saifeddin Ammous put it, sound money is money that is chosen freely by the market, not imposed by governments. Gold is perhaps the oldest example of money in human history. It wasn't imposed by decree. It was spontaneously chosen by the market over millennia, across civilizations that never even came into contact with each other. Egyptians, Chinese, Romans, Persians all recognized in gold the qualities that make for good money. And why? Because gold has natural scarcity. It's rare, hard to extract, and it can't be created out of thin air. It's virtually impossible to counterfeit, extremely durable, it doesn't rust, and it doesn't degrade over time. And for centuries, it was universally recognized as valuable. Gold is, quite literally, the world's money. During the 19th and 20th centuries, gold became the foundation of the global financial system under what was known as the gold standard. Each unit of paper money represented a specific amount of gold. Money was backed by something real. There were limits. There was monetary discipline. But that changed in 1971. President Richard Nixon unilaterally ended the Bretton Woods Agreement and declared the end of the dollar's convertibility into gold. From that moment on, the fiat era officially began a system based on trust, or rather obedience, where money is no longer backed by anything. Since then, we've lived under a regime of structural inflation, unchecked government expansion, chronic debt, and the continuous erosion of national currencies' purchasing power. Gold has held its value, stood the test of time, and remained a safe haven in times of crisis. But the question remains, is it still the best we can do? Despite its millennia-long history, gold faces increasingly obvious limitations in the modern era. The first is physical centralization. Gold is dense, heavy, and difficult to transport in large quantities. Storing it securely requires vaults, surveillance, and high logistical costs. It's simply not practical for a world that operates in real time on a global scale. On top of that, gold creates a structural dependence on intermediaries. Banks, financial institutions, and custodians become necessary to store, trade, and transfer it. That dependence makes gold easily confiscatable. In 1933, for example, President Franklin D. Roosevelt signed Executive Order 6102, making it illegal to own gold in the United States. Citizens were forced to hand their gold over to the government under threat of fines or imprisonment. Today, with the rise of digital technology and global communication, gold's greatest weakness is even more exposed. It's incompatible with the digital world. It can't be sent over the internet, doesn't move easily across borders, and doesn't adapt to the pace of the new economy. Trying to use gold in the 21st century is like trying to send emails by postal mail. Gold is still valuable, but in the face of modern demands, it's becoming a relic of an analog era. Bitcoin is many things: a network, an asset, a protocol, but above all, it's a form of money for the digital age. What makes Bitcoin money? First, its absolute scarcity. There will never be more than 21 million Bitcoins. That scarcity is enforced by code, auditable by anyone in the world, and impossible to manipulate, not by governments, not by central banks, not by corporations. Second, Bitcoin is decentralized. It doesn't belong to any country, company, or institution. Its network is made up of thousands of independent nodes around the world, all following unchangeable rules. Immutable and incorruptible, Bitcoin resists censorship, fraud, and forgery. Its portability is digital and global. You can transfer any amount from cents to billions anywhere in the world within minutes without asking anyone for permission. Bitcoin also offers extreme divisibility. Each unit can be split into 100 million satoshis. This enables microtransactions and accessibility even as its value increases. Another key point, Bitcoin can be self-custodied. You don't need to trust a bank, exchange, or any third party. With a wallet and your private keys, you can store and protect your wealth on your own. And all of this is made possible by proof of work in the mining process that requires energy and computational effort to validate transactions. Just like gold requires physical labor to be extracted from the earth, Bitcoin requires digital work to be issued. It's the modern equivalent of mining, but without borders, without guns, without governments. As Saifedean Ammous put it, Bitcoin is the first scarce digital object the world has ever seen. A new form of scarcity, a new form of money, a programmable gold for the digital age. Before we continue, please, if you are enjoying the video, give us a like and subscribe to the channel. The history of money is a story of evolution. What works as currency in one era can become obsolete in the next, and those who fail to recognize that shift pay a heavy price. In ancient Rome, copper was widely used as money. It was accessible, abundant, and worked for local trade. But as economies expanded, copper revealed its flaws. It was bulky, hard to transport, and easy to inflate. It was eventually surpassed by silver, scarcer, more efficient, and more reliable as a store of value. Those who stuck with copper lost purchasing power and economic relevance. Later, silver itself reached its limit. With the rise of global trade, silver couldn't sustain large-scale economies. That's when gold took center stage, scarcer, more valuable by weight, and more efficient for high-value transactions. The gold standard became dominant, but not everyone embraced the transition. China, for instance, clung to silver well into the 19th century. While the rest of the world transitioned to gold, China's monetary system lagged behind. The result? A monetary crisis, loss of competitiveness, and economic subjugation to foreign powers. Today, we're living through a new period of transition. Gold, though still respected, is beginning to show its limitations in the digital age. And its natural successor is rising with strength, Bitcoin. Just as silver replaced copper and gold replaced silver, Bitcoin is now challenging gold. When we compare Bitcoin and gold side by side, the question isn't which has more tradition, but rather which one better fulfills the functions of real money in today's world. Let's start with scarcity. The scarcity of gold is relative. New discoveries or technologies can increase or decrease its supply over time. Bitcoin, on the other hand, has absolute and programmed scarcity. There will only ever be 21 million units. No more. Ever. In terms of portability, gold requires vaults, armored trucks, and armed security. Bitcoin can be sent anywhere in the world via the internet, radio, Morse code, and even paper letters. When it comes to divisibility, gold falls short again. You can divide it, but only to a practical and physical limit. Bitcoin is divisible into 100 million satoshis per unit, enabling anything from microtransactions to massive transfers. As for durability, both are strong. Gold doesn't oxidize or decompose, but Bitcoin, being digital and immaterial, doesn't wear down. It's pure code, immune to time and environmental factors. Verifiability also matters. Gold requires physical testing, instruments, and trust in experts. Bitcoin can be instantly verified by anyone running a node on the network. Now, think about confiscation. Gold can be seized, tracked, and demanded by decree, as has happened before. Bitcoin, when properly stored, is virtually unconfiscatable. Only you have access to your private keys. And what about censorship? Gold is easy to block, restrict, and control. Bitcoin is censorship resistant by design. No authority can stop a transaction between two sovereign individuals. The conclusion of this direct comparison is clear. Gold was the best possible money for the physical world. Bitcoin is the best possible money for the digital world. No major advancement in history came without resistance, and Bitcoin is no exception. Certain arguments are repeated like mantras by those who still haven't grasped what's in front of us. The first one, but Bitcoin is volatile. Yes, it is just like any emerging asset still being priced by the market. Gold itself, in its early centuries as a global store of value, was also highly volatile. Volatility is not a flaw. It's a symptom of growth. It decreases as adoption increases and the market matures. Second argument, but Bitcoin is intangible. That's true. It isn't made of metal, doesn't have weight or physical shine, but it is mathematically verifiable, digitally portable, and unlike gold, doesn't rely on intermediaries to be stored or transferred. Its strength lies precisely in the fact that it's pure information which can be moved and protected with more freedom than any physical asset. And the most common argument, but Bitcoin can be banned. Yes, governments can try to ban it, but banning Bitcoin is like trying to ban math. Code is language. Knowledge is unconfiscatable. You can memorize 12 words and carry your entire wealth across borders without anyone knowing. That's not just technical resistance, it's philosophical resistance. Bitcoin doesn't ask for permission, and because of that, it cannot be stopped. At the heart of the debate between gold and Bitcoin lies a deeper layer, often ignored: the ethical dimension. It's not just about which money is more efficient, but about who has control. Gold, despite its historical solidity, requires institutions to function at scale. Banks, vaults, armored transport, governments. This dependence makes it vulnerable to censorship, confiscation, and political control. You might own gold, but if it's stored in a bank, it's not truly yours. With Bitcoin, that logic is reversed. It represents personal monetary sovereignty. If you hold your private keys, no one can seize your funds, freeze your account, or restrict your transactions. This ethic is captured in one simple but powerful phrase: not your keys, not your coins. If you don't hold the keys, you don't own the money. It's a call to responsibility, but also to freedom. Bitcoin embodies a philosophy of resistance against the leviathan of the state, the centralized power that imposes, surveils, seizes, and controls. It puts the individual back at the center of the monetary system. In this sense, Bitcoin isn't just a technological innovation. It's an ethical declaration, a statement that money can and should serve the citizen, not the state. Gold was essential in the physical era. For millennia, it was the foundation of value, trust, and stability. But the world has changed. Today we live in a digital, interconnected, instant civilization where information moves faster than any metal ever could. In this new world, Bitcoin stands out as the purest and most efficient form of money ever created. It fulfills more precisely than gold ever did the Aristotelian and modern properties of sound money. It is scarce by design, verifiable by anyone, divisible to an extreme degree, and borderless portable. And above all, It is money that cannot be counterfeited, censored, inflated, or confiscated. Bitcoin doesn't ask for permission. It simply exists as a new benchmark for value, sovereignty, and monetary ethics. And now the choice is yours. Will you be like those who clung to silver and were left behind? Or will you recognize the new standard before the world changes without you?